Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. For this week, we'll be analyzing the markets as they closed on the 2nd of November 2018, and as usual, we will be starting off with the S&P 500 E-mini futures market. So last week, we did see the all-important bounce back towards the upside as the buyers were once again active in this market over the past week. If you recall our analysis for this market from the prior week, we had talked about the importance of all of these wicks towards the downside on these strong bearish candlesticks. So even though we had witnessed the market actually dropping very sharply over the last few weeks, we were noticing all of these wicks towards the downside, which showed that even though sellers were for the most part dominant during this entire move towards the downside, we did see some buying come into the market as well, as was justified by the overall increase in volatility that this market has witnessed over the past few weeks. And that made it all that much more likely for the market to possibly bounce off the 2600 level here that we had pointed out last week. And that's precisely what we were able to witness as well. Of course, we had tons of support at the 2600 level. In the past, we've had at least 3 very, very obvious instances when price found solid support at the level. And so really no surprise at all that the market did find support at the 2600 level yet again. So we did have a very strong week of buying come into the market here for this S&P 500 E-mini futures market last week, and it once again makes a very strong case for buyers to try to push price further up towards the 2800 level that we had earlier pointed out as a very, very important horizontal support and resistance level for this market. Again, you can see there's been ample evidence to suggest that the market has either found very solid support or resistance off of this level in the more recent past. And so we're looking at this level as a very key zone for the buyers to be able to test and possibly break towards the upside. And if then this level can be used as support, we may actually have a resumption of this uptrend that we had witnessed for this market for the bulk of this year. But until then, of course, it's still just a very volatile market to be in. On Friday, you can see that the market actually tried to test this more recently formed swing low over here, and it did provide some kind of resistance for the buyers here. So former support here clearly turned into resistance as on Friday we saw selling once again sort of come into the market here. So we're still sort of trading in the more volatile times in general, but we're also looking at buying coming to the market over here, which is very interesting. And like we said, it does make a case for the market possibly trying to test the 2800 level this week if this momentum from the buyers just seems to continue going into this week. Okay, so the next market we're going to be looking at here is the light crude oil futures market. A very, very interesting market to follow for us last week. Of course, we had a very strong week of selling come into the market over here, and which was really to be expected and is very unsurprising, to be honest. Last week and in the weeks prior, when we were analyzing this market, we've been talking about the importance of this rising support trend line over here. Once again, a very, very obvious trend line, as you can see, that was holding the trend, the uptrend in place over here. We did see a very solid break of this rising support trend line earlier on, and we also witnessed a low volume pullback back towards the rising support trend line. And then we did see some resistance come into the market as well, which was interesting to see. We had also notified how this entire pullback point on the support trend line over here basically lines up with the support and resistance level here as well, just underneath or at about the $1.68 round number. And again, you can see we had major areas of support and resistance created off of the $1.68 level. So the good confluence here coming from the $1.68 support and resistance level and the pullback point of the rising support trend line gave all the more reasons for sellers to come in the market over here and take price further towards the downside. Interestingly, we noticed that the market actually didn't even hold at the 64.5 crucial area of support over here. As you can see, we had major instances of price finding support at the 64.5 level not too long ago, and over here the market just seems to basically move through this level with rather ease. Of course, that's a point that goes in favor of the strong momentum towards the downside that we have for this market currently, but it also makes for a potential case for a pullback earlier on towards the 64.5 level this week. This is the $65 level and not the 64.5. Anyways, we do have a strong case of the market potentially looking to pull back to the $65 level and then possibly continue its way down. If this momentum towards the downside, of course, just continues, we are looking at the $60 level as a potential short-term target for this momentum towards the downside over here. And if the sellers really just continue to take price further down, of course, the $60 level will come into play. And it'll be interesting to see if the market is going to be holding at the $60 level at all, or will the momentum towards the downside actually be able to push through the round number, maybe use it as resistance as well, and just continue to build more momentum towards the downside. So our overall analysis for this market, so if you basically go back to a month ago when we were discussing this market, we had been talking about all of these pullbacks, deep pullbacks into the uptrend over here as a potential warning that the uptrend over here, long-term uptrend, was possibly looking to reverse off of the $74, $75 long-term support and resistance levels that run right around here. And we had talked about how all of this major selling or periods of selling come in the market over here could be potential indications of the market trying to either reverse off these long-term support and resistance levels, or at least post a major retracement into the long-term uptrend. And we're now seeing developments on that front over here with all of this really strong-looking selling that's now coming into the market and moving rather easily through major support and resistance areas that were created in the more recent past, and also areas that were created like long time ago. So as we said, going forward this week, we're looking at the $60 level as a major potential target for sellers here, and it should be interesting to see whether the $60 level will hold as support, or will it just allow sellers to basically continue selling and take prices further down south. Okay, so the next market we're going to be looking at here is the Euro currency futures market. If you recall our analysis for this market the prior week, we had talked about the importance of this swing low over here and how the market, even though it looked to be bearish for the most part, could potentially find support at this former swing low, and that's exactly what happened last week. We did see a major bounce come off of the support level over here, where the market obviously bounced in the more recent past as well. So no surprises there at all. But interestingly, we still see the bearish side of the story intact over here. As you can see on Friday, the market did find resistance off this former support level over here, this short-term support level that turned into resistance. So that's still an encouraging sign, and makes for a possible case for the market trying to attempt another retest of this former swing low over here, and a possible break towards the downside as well, which could eventually then create a case where we could potentially look at this more longer-term downtrend, then continuing on, and for us to basically see the back of this notorious sideways consolidation phase around the 1.16 level. On the other hand, if this bounce or if the support at this former swing low over here proves to be very strong, and we do see buying come into the market early this week, we could actually have the market revert to the prior theme where prices continue to be attracted to the 1.16 round number and this area of support and resistance that has for the most part been acting as the center or the pivot for this entire period of consolidation. So we're still very close to the 1.16 level, which makes us nervous. But so far we see the sell side story over here, or the bearish side of the story over here, continue to remain intact, even though we did see a bounce off of the swing low over here. As long as all these minor and major areas of support and resistance here continue to act or continue to provide resistance to price over here, we still see this bearish story intact, and we will be looking forward to a potential retest of the swing low going into this week. Okay, so the next market we're going to be looking at here is the gold futures market, which did give us a source of excitement over the past week and also a source of disappointment. So talking about the exciting part first, we see a definite increase in volatility over here and liquidity in general. So compared to the week prior to last one, of course, we were looking at all of these dead candlesticks over here and dead price action, where the market just appeared to be very, very tightly squeezed within a period of support and resistance that we're going to be talking about in a short bit. But majorly, we're looking to point out the difference over here in terms of the sizes of the candlesticks over the prior week, which is a clear indication that an increased level of interest from both buyers and sellers is now coming in on the gold market, and that's a very interesting sign and a potential indication of a possible breakout past this area of consolidation that the market seems to be stuck in over here. And that area, of course, is identified by this more longer term area of support and resistance over here. Of course, a very obvious instance of support back over here, and then multiple occasions in the more recent past where price either found support or resistance off of this level over here. And of course, down below we have all the support and resistance coming in from these more recent highs and lows that the market created off the 1210-ish price level. You can see multiple candlestick wicks towards the downside sticking into this level, giving us evidence of support, and then of course multiple bar highs over here, showing us that there was formidable resistance at this level as well. And so the disappointment here, of course, is coming from the fact the market wasn't actually able to break past either the resistance over here or the support over here over the last week. But just looking at the increased volatility here, it does make for a very interesting market for us to follow going into this week. Just looking at the momentum from the buyers over here, especially on towards the end of last week, it makes for a very interesting case for the market to potentially trying to test this resistance again early on. And if you see a sharp break towards the upside, it could be a very, very interesting case for the market potentially looking to continue its way further up and basically pulling further into this more longer term downtrend over here. On the other side, if this level just continues to act as resistance, we could see the market once again make a move back down towards this area of support and resistance that's currently acting as the floor or the lower end of the range that the market seems to be stuck in. And then again, it will be a matter of whether this level will then continue to act as support to keep price contained within this area over here, or whether we'll see a break towards the downside and then the market basically making an attempt to try to continue with a more longer term downtrend over here. So all that remains to be seen. But like we said, it is interesting to see some interest from traders coming back into this market, which is an early indication or is a possible indication beforehand of the market potentially trying to break past either this form of resistance or the support level over here. Okay, so finally we look at the 10-year Treasury note futures market, which also posted really interesting price action for us to follow last week. If you recall our last analysis that we made for this market, we had talked about the importance of the market making a move basically past this former support level, as you can see marked by these two bounces off of the level over here, and how the market initially having found resistance at this level actually wasn't able to build up any kind of momentum towards the downside at all, and we'd actually seen the market make a move past this level. And we had talked about the importance of this move basically going past this level over here. And we had talked about how if this level just acted as support, price could take further up north, and then a lot will then depend on whether the market will be able to hold at the 119 price level over here, which is actually a more important and a more decent looking support and resistance level. And that's exactly what price did last week. As you can see, we did find support off of this former support level that provided some kind of resistance earlier on, and then did not provide any resistance and basically flipped back to support and allowed for more buying to come in the market until price actually hit the 119 level. And this area of support, former support and resistance, as you can see over here, then continued to act as resistance and allowed for selling to come in the market. You can see that as price was making its way back down, once again found some kind of support at this former area of support over here as well, before the market just continued its way down on Friday to close strongly bearish. So we do have a very good looking and a very interesting case here for this market, because now if this former area of support can proved to provide resistance this time around, and we don't see action that was reminiscent of the last time the price was here, where obviously it didn't hold as well in terms of finding resistance as was expected, then we would definitely have a very strong case over here. As we said, if the resistance comes in on the market at this level over here and allows for more selling to come in, and then we could definitely see the market basically going past all this entire period of consolidation and possibly continuing on with a more longer term downtrend over here. That of course remains to be seen, but as of now we're still looking at a very cautious market for the most part, as it's obviously reacting to all these short to long term support and resistance levels. So even though we're past this entire box of consolidation for the most part, we're still not exactly trending, is what we should say. And so we're definitely looking for more momentum to build up towards the downside over here. Just looking at how price bounced off the 119 level over here and now seems to be heading back down underneath even this other level of support and resistance that we had pointed out over here. So as long as these levels just continue to provide the needed resistance here to buyers, we should see sellers here continue to dominate and take price further towards the downside. So this should also be a very, very interesting week for the 10-year Treasury note futures market, this ongoing one.